Hello, what's up? Good day, FOREX traders. Welcome to today's video. And I supposed to upload a video yesterday for you guys, but due to one or two technical issues, I could not. But by the sheer grace of God, I'll be uploading the video for you guys today. And as you all know, if you've been active on the group, you know that I normally wait for your questions based on my last classes on what you have issues with. And since I've not been getting questions, I'm assuming that you guys are really understanding my teaching, and I'm glad that you guys did. So in today's and I noticed something in my last video. The last video, that is the episode 1 of my mentorship video. I discovered that I was trying to put the whole thing in one video, which is making the video to be very, very long, and I know how hard it is to comprehend a very long video sometimes. So I'm thinking of making the video at least 10 to 15 minutes or maximum 20 minutes long. If I could not finish a video, I'll just leave it and make another video so that you guys can watch it like bit by bit, because trying to watch a very long video, like, it might really affect you guys concentration, this thing. So by the special grace of God, in today's video I'm going to be, our last video was on how the big bank trade, right? And I also discussed about time frame combination. So in today's video I'm going to be talking about the big bank POI, that is the big bank point of interest, or particular places in the forex market where the big bank will want to execute or move their trade higher or lower. If you have been following me from the very beginning of both my free videos and my content in the mentorship, you will understand that I always say that, especially those of us in the private mentorship, I always told you guys that the strategy I'm going to be teaching you guys is the one that you are following the bank. You are following what the bank is doing at the very moment, so that you will not be trapped by the bank. Since the bank does not lose money, if you are following the footprint of the bank, then it will be difficult for you to, it's not that you will not lose money, it will be difficult for you to lose money if you can work on your psychology, work on your risk management, work on your entry and your exit. You will definitely win since you are following the bank. So in today's video I'm going to be discussing on the POI of the bank, or we call it the footprint of the bank, where the bank will want to come back and mitigate, where the bank will want to come back and tap into before they move price either higher or lower. And we have like over 8 type of POI in the forex market, which I'm going to be discussing in this video. And if I don't want to make this video to be too long, I might not finish it. I'll make another video for you guys tomorrow. Then if you have any question, come to my DM or you drop it to the comment section. Now, the number one place the bank always targets, or what the bank always look for in the forex market, is liquidity. So the number one POI, the number one point of interest of the big bank or the big institution in the forex market, that is the composite man, the person that is moving the market to its direction, is liquidity. Now, what is liquidity in the forex market? Liquidity is simply liquidity simply means money. And where does money lies in the forex market? Money is your stop loss and my stop losses. All our stop loss is money. Is where our money is. If the moment the smart money take out your stop losses, that fuels the market for them to move, because they have not gotten buyers and sellers to sell to, and sellers to buy from, and buyers to sell to. That is just why your stop loss are very important to the big bank. That is why manipulations happen in the forex market. So liquidity is one of the places that the big bank targets in the forex market. And what are the types of liquidity that we have? We have equal high or equal low liquidity, and we have the trend line liquidity. I think I've discussed this equal high in my last video, but I'll still discuss it in the video. As you guys can see, this candle and this candle, they close at the same place. The equal zone, that equal close of the candle that's what we call equal high and equal low liquidity. This one is equal low liquidity. If you can see right here, as you can see right here and this place, you can see the candle close at the same place, at the same point. Now this is liquidity. This is liquidity because the big bank will love to tap into places like this to take people out, because so many people's stop losses are going to be either above or below these places. As you guys can see right here, this is a perfect example. You can see this equal high and this blue and red candle. You can see they close at the exact same point. What did you see right here? The big bank wick into it, take everybody out, those people that had their stop losses around that place, and then you yank down into the distance. As you guys can also see, these are also liquidities. All those equal high and equal lows are also liquidities in the forex market. Same thing happens right here. This is liquidity. Every equal high and equal low are all liquidities in the forex market. What are the second type of liquidity in the forex market? We have the trend line liquidity. Let me go to the lower time frame so I can see. Even the higher time frame, I can see trend line liquidity. I'm coming. As you guys can see, there is as you guys can see right here. Let me see, where did I keep this thing? As you guys can see right here, you can see first touch, second touch, third touch. This is first touch, price go, second touch. You take out this liquidity, come back, this is the third touch. So you can see price broke down. Now one thing you need to understand is that as price is going back to this trend line, people are putting their stop losses on this, on top of this on top of this trend line. So all these their stop losses that are here are all liquidities where the bank will want to tap into. That's just look at the perfect example right here. As you can see, the trend line break. As you guys can see how the trend line price broke out. I thought I believe I dropped this signal in the group. I was expecting this price to go up a little bit more, but it did not go up. You cannot predict the market every time, but it did not go up. But although I took my take profit around here, I did not hold till the sky, so it did not. This one I was able to take my profit around this place. Even the second move, I also predicted it. I share it with one of my friends. So you can see price broke out of the trend line. And you can see it took out liquidity, and then it broke down. when you see first or second touch, behind this trend line there are stop losses. There are people who are placing their stop losses. Those some people, the way some people trade is first touch, second touch, third touch. Now at this test third touch of the trend line, most of their stop losses are here. So the big bank will want to push price all the way back to their stop losses, take them out, and then yank them back, and then start moving drastically on its way to the direction they want to move the market to. They want to move the market to. That is just what happened right here. So what the trend line liquidity is not even important. What you guys should focus on is the equal high and equal low. I just give you guys that one as an example just for educational purposes. Forget about the trend line liquidity. It's not necessary and it's not needful in what I am teaching you in this video. I just told you guys for just educational purposes. The liquidity that you should put into consideration, and is very important, is the equal candle close liquidity. Equal candle close liquidity, and I've shown you guys that time without number. So the second type of the third type of liquidity is every high and every low. This one will be important, and you will understand better when I start teaching you guys how to enter it, how to like forex entry, how to enter a trade. Every high and every low of the candle is liquidity. Every high, because people are buying on the 1 minute. So many people are buying on the 5 minutes. Billions of people are buying on the 15 minutes. Billions are buying on the 30 minutes. Millions and millions of people are buying on the 1 hour. Every time frame you can think of, people are buying and selling on that time frame. So most of their stop losses are at the end of the candles. At the end of the candle, depending on the time frame they are. So every high and low of every candle is liquidity. People's stop losses are always there. So the big bank most times will push price back to the high of that candle, then broke back down drastically, or the low of that candle, then push back down drastically. So these are the types of liquidity we have in the forex market. The second type of smart money POI is called the order block. Now what's an order block? An order block is a buy to sell or a sell to buy move created by the big bank. Let me show you guys an example.